The big shift in customer loyalty based on the technologies we're working on today is how you can respond to customers' needs as they present themselves. So it's no longer enough to wait for a customer to come to you and ask for something. The future's all about predictive. Understanding the customer's needs before they even know they have a need and being responsive to that need as it surfaces. So ultimately, the technologies we're deploying in banking today give options to customers in real time when and where they need the bank to help them. The issue with privacy surrounding that is one really of value exchange rather than privacy. So if you have to give your data to a bank to get service from them, you must get some value exchange in return. And that's the core issue, not necessarily privacy. Because if I'm willing to give you the data, then there's no privacy concern as long as you make sure you give me some value back. The real epiphany for me writing Bank 4.0 was about first principles design. The most disruptive innovations throughout history have all had this common theme, that they've thought about the world in a different way, a simpler way, applying technology. And banking is really very much ingrained with behaviours and systems and regulations that have been in place for decades, sometimes centuries. So to displace that thinking, you need to be really creative and you need to challenge the status quo. So first principles design is really about getting back to the basics. What should a bank do for you? And ultimately, it's three core things. The ability to safely store money, the ability to move money, and the ability to access credit or invest that money when and where you need it. So I think there's two aspects to this. One is, if you're a technologist, you have to think about the role technology plays in delivering experiences to customers. So that's first and foremost. But if you're a bank, you have to understand you're no longer competing against other banks. You're competing against technology companies who can deliver the technology without having to worry about the legacy systems and the policies and the processes that banks have in place. And that's the biggest threat to banks, is that they have to become technology companies to compete in the future, but to do that, their entire culture and entire way of operating has to change. So in the MENA region, we're starting to see some consolidation. We're starting to see banks merge, and this is this roll-up strategy we've also seen in the United States. It's quite common because banks are looking for scale to still operate efficiently. But the core problem behind this, the reason it's driving this consolidation, is smaller banks can no longer operate efficiently to compete, because the mechanisms of branches to acquire customers, that's simply becoming a too costly way compared with digital customer acquisition and digital engagement. So the consolidation that we're seeing in the industry here in the UAE, in the United States and so forth, is a signal that the economics of banking as we knew it are failing. So my second book was actually entitled Branch Today, Gone Tomorrow. And I've long predicted that branches would fall into trouble. A lot of people say I'm the death of branch guy, but I've never actually said that. But I've said if you're a bank and you rely on branches for your business, yes, you will go out of business, you will die. Because customers' expectations are now around, how does the bank solve this problem for me? And if the only way I can get access to your services is through the branch, that's just too limiting a factor in today's world. And so we have to work out the role the branch will play in the future. Honestly, 95% of the things that we do in banking today just simply don't require a branch. So one story that I find interesting, I put it actually in Bank 4.0, was Siam Commercial Bank. Knowing they have to take this digital transformation path, they were very transparent with their staff, and they said, listen, we are embarking on this multi-year transformation. Some of you, the jobs you currently have will disappear, and you've got a choice. You can either come with us on this transformation, we can retrain you and commit to finding you a new role, or you can walk away. But what we won't do is we won't keep your job just to keep you happy. because the world is changing. And I think that's the sort of culture. You need to have this collaborative culture. You need to bring your team along and help them understand this train is leaving the station and you're either on it or you don't have a role in the future of the bank. It's a challenge, but it's transparent and honest. When I look at the talent we're going to need to be successful at banking in the future, I list in Bank 4.0 a number of jobs that may be counterintuitive from a banking perspective. The top jobs over the future will be artificial intelligence, data science, behavioral psychology, algorithmic programming, particularly when it comes to risk and things like that, blockchain technologies, and even things like identity brokering, because banks won't be owners of KYC in the future. They'll link into identity networks. Just like when social media and the web came along, there are going to definitely be new jobs created as a result of this technological shift. So when you think about the bank of tomorrow, a good template for the bank of tomorrow is probably an organization like Ant Financial, the parent company of Alipay. And when you look at their organization chart, every member of the board is a technologist. Every member of their executive committee is a technologist. And so if you want to compete with Ant Financial in the future, you have to compete on that basis. So it has to start at the top with that relentless mission towards great technology, great experiences, and transforming the bank into this living, breathing capability or utility that lives in the lives of customers. If on your board you don't have a single technologist, I'm sorry, I don't see how you could possibly get to that destination. Bank 1.0 is the traditional version of banking that we've had since the days of the Medici in Italy. So from the 13th century up until, there's still Bank 1.0 organizations around today. Bank 2.0 was the introduction of self-service banking. So this was ATM machines, telephone banking, and then eventually internet banking in the mid-90s. Bank 3.0 was the first mobile-driven views of banking. So omni-channel, or omni-digital experiences of customers. But the real difference is Bank 4.0, because that changes us from being banks that use technology to now being banking that's embedded in the world around us through technologies like artificial intelligence, smart glasses, a smartphone, where the bank sits in your life and solves your money problems when and where you need them solved. So the next obvious question is, what does Bank 5.0 look like? And ultimately, when I was thinking about this transition, I thought, well, you've got the world moving from physical to digital, and that's happening in every industry. And in banking, you've got a high friction environment, and you're moving to a low friction, low latency environment. So it's on this trajectory. And Bank 1.0, 2.0, 3.0, 4.0. So where does 5.0 take us? Really, it's when banking and money, the way we have it today, disappears. And so you really come up with different mechanisms of value exchange based on abundant energy systems and universal basic income, and those sort of mechanisms drive you to a very different economics and socio-political environment. So we're probably 100 years away from that. So the real change in the way economics and politics and social behaviour will change is around artificial intelligence. So artificial intelligence is going to dramatically change our expectations. It's going to change the way we work. We'll work a lot less. As this happens, the value systems that we have in the world, the way economics work, supply and demand curve, these things will start to break down. So we have to find new ways of exchanging value to each other. Maybe we'll trade time. Maybe our basic needs like housing and food and education and healthcare will just be built into a system that's highly automated. So what becomes valuable in the future? Is it the human experience? Is it culture? Is it information or data? This is a 100-year transition that's going to start over the next 20 to 30 years with highly automated societies based on AI. one of the really interesting side effects of artificial intelligence will be, as the most valuable companies in the world deploy AI, you have a dramatic shift in the way capital markets are structured. The most valuable companies in the world will all be technology-based. Whether it's a transportation company, that's going to be autonomous driving tech. Whether it's health tech, it's going to be computerized sensors and gene therapy. In banking, it's going to be fintech. All of these industries are going to be technology first. But in the old days, we required a lot of labor to convert raw materials into product to meet demand. In the future, you create an algorithm that can reach infinite demand without any additional labor participation. So as technology companies take over more of the economics of the planet, labor requirements are going to come under more and more pressure, more technology-based unemployment, which means ultimately there'll be pressure on the system for these technology companies or governments to solve the fact that technology's displaced a number of the traditional workers in the ecosystem. The one thing that differentiates Jeff Bezos and Jack Ma is the economic system that they've come out of. Jeff Bezos is a super capitalist, so his drive is capitalism. And Amazon is the ultimate expression of, pure capitalist, creation. Jack Ma comes from a social cause. He's doing a lot of the things he does is to change the world. And so ultimately, I think Jack Ma will be a more positive influence on the world in terms of the role technology has to play. And I'm a techno-optimist, so I think that Jack Ma has more value to add to the world than Jeff Bezos at the moment.